Hello and welcome to another update video about Ethereum. Yeah, Ethereum has now rallied into the communicated resistance zone. I'm actually not sure if I communicated that resistance zone in yesterday's video or if it was just on Discord for gold members, but I think it was in the last video, similar to Bitcoin, where we said Bitcoin has a good chance to rally now into the local, let's say, micro resistance area. Ethereum did the same in a somewhat corrective structure. So I want to share with you today the two pathways that the chart could take, short-term bullish and short-term bearish scenarios, as well as the relevant parameters that we have to be watching to keep each of them, let's say, relevant and to understand when Ether is deviating from one of them. So that would then shift probabilities maybe to the other one. So yeah, obviously we're still moving overall in corrective structure. So I can still not communicate fully that the wave 4 correction is over. So at the moment, the yellow count has preference to me. And in this count, that's what we would call short-term bearish count. We have an A wave to the downside into the 20th of March low. That was the low point at around $3,060. Then an A, B, C structure to the upside in what would be wave B. And then the C wave to the downside of wave 4 would follow now, or is basically unfolding now. That's the idea. Yesterday's drop looked like, or it formed basically a 5-wave move from the Monday or Tuesday high. So I said to you yesterday, this looks like wave 1 of wave C. We have a wave 2 corrective rally. Next, third wave down, 4, 5. This would be the ideal structure how we could work on this C wave to the downside. Now, it's great how the price is reacting to the parameters, because the price reacted to the micro support area. That's what we want, and rallied into resistance. So we have a rally from support into resistance, which technically, I mean, that support area, if you remember, it is actually, we could even say maybe wave B is still unfolding. I don't want to completely ignore that scenario, but I've taken it off the chart because of the 5-wave move down. So remember what I highlighted before. I can actually show you here on Twitter. I did post that on the 10th of April. That was still sort of the idea. That's actually why we introduced that yellow support zone. By the way, if you don't follow us here yet, feel free to do that. Just make sure that you follow the correct account. You can find the link in the description. But this was the situation we had on the chart where we said, okay, we had a drop into support. As long as we're holding 3,398, one more high in wave C of B is actually a possibility. I don't want to fully ignore that, but I've moved away from this interpretation. Because we had one more low, and that made the move down look more like a 5-wave move. Now, the wave 4 here, the small wave 4, can't really be an impulse. So it's difficult. It's always a bit of a subjective thing with these microstructures, but be aware the main reason why we use them is to understand where the support areas are and the resistance areas. And the price respected the support area and rallied from support into resistance. So I count the B wave as completed, and the move down looks like a 5-wave move. You can actually see that here. It looks more like a 5-wave pattern, which I call wave 1 of the yellow count in wave C. The move up into the resistance area between 3,570 and 3,660 happened. The price reacted to the golden ratio, and if we see now a break below yesterday's low at $3,415, it's likely that the third wave to the downside is unfolding. Wave 3 of C, then we should get a 4-5 pattern to complete the correction. However, what happens if we break above resistance? Well, that would shift probabilities to the white count. So if we now see a break above 3,660, then it would rather mean that it's not yellow wave 2, because a wave 2 should not really move beyond the 78.6 retracement. It shouldn't. So, if we see a break above 3,660, it would rather say we might be in wave C of the white count, wave C of 3 in the white count, yeah, and then wave C of 3, yeah, and that would indicate that the larger degree wave 4 correction actually already finished. So it's all a matter of probabilities. They can change again, but that is what I would then go with, especially if the price also breaks above the Tuesday high, which was formed at 3,730, because that would formally invalidate the yellow structure as it is to the downside. Now, the price would still have the chance to morph and transform because the white count is a diagonal pattern, and diagonals, they consist of corrective structures. So it is not the easiest move to expect a precision from, but still I give my best here to give you the most probable scenarios. So we have two. We have one that's short-term bullish, one that's short-term bearish. Both, however, are bullish. So either here we should continue the bull market, or after the C wave is completed, we should continue the bull market. I mean, we are in shouldn't say that, the uptrend. So that's pretty clear. And I've given you very clear pivots to watch to decide if it's rather white or yellow. At the moment, I'm leaning towards yellow, but yeah, we have to be aware that in these corrections, things can always change. So we have to take a flexible approach. So that's my update about Ether. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.